Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, Chris Vermeulen of Technical Traders Ltd, located at thetechnicaltraders.com. And I got to tell you, these markets are fast moving right now, from silver to the stock market to copper. If you're losing right now, and that's because fast moving markets are a friend to traders. So what we need to do right now is we need to take a dive into these charts and check out the technical action that's taking place. And I can't think of a better person to do that than technical trader Chris Vermeulen. Chris, I'd like to thank you for joining us again on Silver Doctors.
Hey, thanks for having me again. Yeah, great to be here.
Now, Chris, let's start off with silver because, just yesterday morning in the pre-market hours, we traded down to a 21 handle, and I'm thinking, oh my goodness, bottom's about to fall out. But on the other hand, I'm thinking, I hope this is a double bottom on the daily chart. And now we're up almost 10% just today. So what are you looking at in silver? And I guess the first question is, has silver bottomed, Chris?
Yeah, I would hope so. This is a level that it should be finding a bottom. Gold actually corrected all the way down to where we talked about in August. I don't know if you and I talked about it specifically, but I talked about in August that this 1800 mark, give or take, is going to be really critical for gold. And really we saw that happen this week, last week. And silver's back down to this double dip, kind of this double bottom level. Seeing the silver miners actually leading the way to the upside. And I've kind of been talking about this with subscribers over the last 4 or 5 trading sessions. There's a specific type of movement on the chart where when we see exhaustion selling, which is what we've been seeing in the precious metals market the last 4 or 5 trading sessions, where we see like the gold or silver miners gap lower, sharply lower in the morning, and then they rally back all session. And that's after a big drop, which we've seen. Obviously, a lot of people are in panic mode the last week or so in precious metals because we've seen such a big drop. Gold miners down sharply, gold down sharply, and kind of step back a couple steps. So about a couple weeks ago, we were watching which group of stocks, what was the best asset now when we saw the precious metals market starting to break out. Because I mean, it gave a big breakout signal a couple of weeks ago. And then the COVID vaccine came out and completely reversed the sector to the downside, took all the wind out of the sails. But back then, silver and the silver miner juniors like SILJ, which is an ETF that tracks the juniors silvers, they were leading the way higher dramatically. They were outperforming every other sector in the stock market in that short period of time. And when you look at the charts now, we see the silver miner juniors, they're holding up the best out of the silver large caps, the gold juniors and the gold large caps. The silver miner juniors are still holding the best chart patterns. They're up the most today, and gold or silver miners silver are holding that critical kind of double bottom level and the 150-day moving average. So there's a lot of things coming together this week from a long-term standpoint, a correction, Fibonacci pullback standpoint, and which sectors are leading. Like everything is kind of pivoting today. So it's a really exciting day. You and I are talking about silver because I think everybody's blood's starting to boil. It's getting exciting here, right?
Yeah, it is an exciting day in the silver market. Definitely an exciting day to be a silver bug. And let's stay on gold here because one of the things I'm looking at, if we want to split hairs, and I actually like splitting hairs, but if we want to split hairs a little bit, silver never made technically a lower low if we count that intraday spike low from back in, when was it? Back on September 24th. But gold, on the other hand, gold actually made lower lows. And everybody, all the perma bears are coming out saying, oh my goodness, the bottom's about to fall out, so we just put in lower lows. So sticking on gold and silver here, and especially with gold, like what are you looking at to see some of the indications to say, the short-term trend might have been bearish, but what are you looking for to know that it's been turning around to get bullish again here, Chris?
Right. So yeah, back in August when we had the first big drop in gold and then it had a rebound, and based on that move there, we were able to get a read on the market weakness. How much downside potential can we see from that sell-off that is still bullish? And that brought us down to this 1800, 1810 level, somewhere there for gold. And so while a lot of people have been panicking watching gold go lower and lower, making multi-month lows, I've been saying, hey guys, this is perfectly fine. This is what we actually want to see is people are panicking out of gold. That's what makes a bottom in a market is when everyone gives up on it. And from a technical standpoint, really, it's kind of between 1785, 1795 to like 1810. And that's right where gold has been chopping around in. And those are the levels where people have been panicking. I get from people wondering, should I short gold? I mean, when I hear everybody panicking and then they want to short it, I'm like, okay, we must be near a bottom because that's the way it typically works. So from a gold standpoint, we're at a really critical level. If this level fails, I think we're going a lot lower. But everything is kind of lining up, I think, in terms of the precious metals market and the miners that gold hit a major support level. It looks like it's putting in a bottom. Silver's come down to a critical support level. Silver miners are leading the way. So I like gold. I think gold here is still a major bull flag. I think it's going to go a lot higher. We're going to see more uncertainty in this market. COVID's not gone. There's going to be stimulus. So I think, gold still is a very good defensive long-term play.
And if I could just add, gold dropped below its 200-day yesterday and spent a day there, and today it shot right back up through it. And I know, I can't fall into that trap where past performance is not indicative of future performance, or however the saying goes. But here's my point, right? My point is the last time gold literally vaulted right off of that 200-day moving average and went straight up. So one of the other things that I'm looking at for possible confirmations that we could be looking to rally here is platinum, because platinum's had a rough year, Chris, and it's been down pretty much all year long with the two huge gyrations, but now we finally turned positive on the year just in the last couple of days here. So
yeah.
So are you seeing any cues from platinum, and what are you looking to finish the year? You're looking for platinum to finish the year strong, and is it telling us anything else about the metals market?
Platinum looks like it's put in a really big bottoming formation. I think it's just starting to break out. So I think it's got a lot of upside. Typically, when an asset breaks out of a major multi-year or multi-month basing formation, it has a really strong run. Gold broke out in 2019, had a very strong run, and it's still strong. Silver broke out earlier this year. It popped through 21 and just surged higher. And so platinum's at that kind of that threshold on the verge or starting to break out here, and it could actually see a really nice run for several days or potentially a couple of weeks. So platinum is, you don't hear many people talk about platinum, and that's a good thing. That means it's not a crowded trade, and usually you don't hear about the big winners until later, and then you want to get a piece of it and you buy near the high. So the fact that it's kind of been flying under the radar and that it's about or breaking out of this basing formation, it's got some good potential for a really strong pop over the next couple of weeks.
Mm-hmm. Very interesting. And taking some cues off of that, like speaking of a pop, what in the world is going on with copper right now, Chris? I mean, copper is up at $3.50 per pound. And that, I mean, I don't want to say it's going vertical, but my goodness, I had to take a step back from the copper chart there.
Yeah, believe it or not, I haven't looked at the copper chart in a couple of days, so I probably missed that big pop. I don't follow copper too much because I don't trade it, but I do know it was doing really well. It was leading the way. I mean, you see copper when the economy is doing well. Usually, when people are confident in the future, copper goes up, and that's what we've seen. I know with the vaccine news, we saw copper do well, and economic stocks. People are piling into small caps and the Dow stocks, industrials, expecting the economy to start gearing back up in production, and so copper I would expect is doing well. It sounds like it is because they kind of fall in that category.
Indeed, because I call myself a fundamentalist first and foremost. So I'm going to leave the charts for smart people like yourself, Chris. But because that's why I'm looking at copper, because I'm looking at copper from a fundamental point as a couple different things. One, as that inflation hedge, and two, as whether it's the economic growth or whether it's all these Green New Deals, which is going to be, kind of induced economic growth. The outlook kind of looks good for me. But switching to something that you do have expertise in, I know and that's crude oil. So I know before you were looking for crude oil to roll over, but I'm also thinking, is $40 a price floor here, or I don't know what to make of crude oil because it spent so much time just sitting there at that $40 level. What is your read on that, Chris?
Yeah, I think crude oil and copper actually are going to struggle they have a big wild card, which is how big and how long is this wave 2 lockdown going to take place? I mean, we're already seeing massive lockdowns in Europe. I mean, they're in tighter lockdowns than they were in the first wave when we didn't know what the heck was going on. Um, and I don't think the lockdown COVID wave 2 has really hit the stock market yet. I think we're going to get earnings. Tech's going to obviously do well, but I think people are going to realize, hey, just because there's a vaccine and we see there's light at the end of the tunnel when everyone's vaccinated, they're going to realize, hey, the earnings still aren't here yet. And I think we're going to have some tough times. And I think depending on how COVID unfolds this winter is going to really play a big role in people's outlook for crude oil and copper for that reason. I think if COVID really gets really gnarly, I mean, it's pretty bad right now, but I mean really bad where there's forced lockdowns and you got to stay inside, we're going to see oil, I think, go and have another massive crash. It's going to take a long time to recover from this. But, you know, we're seeing crude break out now. And I was drawing on the charts, and the upside potential for crude based on the momentum we've had is pretty ridiculous. I mean, it's showing that we could run to $63 a barrel in crude oil. And I mean, that's huge. And back in 2019, when I was doing the analysis, I had talked about crude oil going down to $32 a barrel, which sounded really crazy and out there as well. But that's what the long-term charts were pointing to. And of course, we went well below 32 the following year. So, I mean, the market has a way of always moving what doesn't really make a whole lot of sense, right? Until after it's made the move and you realize, okay, well, maybe, you know, everyone's buying into crude now because the economy is going to be great. 2 or 3 years from now, we're going to be booming stronger than ever. So you never really know. And that's the nice thing about technical analysis is oil's back into an uptrend. It's breaking out and the upside targets are pretty darn big. We just need to know there could be some rough rides, some hiccups in that chart, depending on how COVID plays out here. Because I really think crude's going to be up and down with COVID news as there's lockdowns across North America.
Mm-hmm. And speaking of, you know, the COVID and the markets and the interaction there, you know, one of the things that I'm thinking about is you know, you got the S&P and you got the NASDAQ still, you know, putting in record highs. It seems like they're also shrugging off this election uncertainty. Like it doesn't really matter if it's Biden or if it's Trump. It's all good for stocks, it seems. But you seem to be thinking that we might be coming up to a blow off top phase, if I'm understanding your recent writings correctly there, Chris. What are you looking for? Some things that say we might be at the end of a mania phase, or I don't want to put words into your mouth, but talk to us about stocks.
Yeah, so I did a talk about this about a month ago using a super cycle that really goes back to pretty much 2000. And when you look at the asset prices in terms of their values, we're at this like 20-year super cycle where stocks and real estate are back up near these major highs. Everyone's into the technology, everyone's into stock market, into real estate. And commodities are at one of like their lowest level in like 100 years. I mean, if you took them all, grouped them together, they're actually very undervalued compared to other asset classes. And so we see this massive cycle rotate back and forth. And I have a feeling we're getting back into a commodity-based bull market, like a huge cycle to the upside. And really, we're just starting to see the tip of the iceberg. And the thing is, some of the biggest moves in these kind of exhaustion kind of tops, these parabolic moves in the stock market and even real estate prices, is you don't know where the top is. All you got to know is it could be explosive to the upside. There still could be a lot more upside gain, but it's going to be probably followed by a very severe drop. And then eventually it'll chop around for a while, and then it will give back a lot of the gains that we've seen, probably all the gains we saw in 2020 and potentially a lot more. So I do think we're getting there, but the thing is it could still be like this is a 20-year cycle and nothing turns on a dime. These are major trends. It takes a lot of people's mindsets to change and rotate from one asset class to another. So I think over the next year or two, we're going to probably see a very different picture. It could be a lot sooner than that. We don't know. And that's the nice thing about technicals. We're just going to follow the price. Right now, we're still in a raging bull market for stocks. Precious metals are just starting what could be a mega super cycle to the upside. And you got to follow those trends until proven wrong. And then you find the next way to benefit from another asset class rallying or to benefit from things collapsing.
And when you're talking about that change in the mindset taking place over some time, I'm kind of thinking, well, that's kind of adding fuel to gold and silver's fire there at the same time. That's slowly building that momentum, if
Hmm.
I'm understanding that right, or if that even made sense.
Yep.
Um, Now, Chris, shifting over to the dollar here, this is one of my concerns because everywhere I go, prices seem to be rising for consumer prices. If it's on food, if it's
It's
on,
crazy.
you can't find an Xbox. My son wants a new graphics card for computer. You can't find it, and stuff is shrinking in packages, and it's getting more expensive. But the dollar index has still been relatively strong. But
Hmm.
now it looks like the dollar is just about to fall out of bed here on the DXY. So,
It
what are you
does.
looking at in the dollar, and what are you looking at over maybe the next year or so with the dollar?
Yeah, well, I'm glad you brought it up because the dollar on the monthly chart is actually very similar to what we saw back in 2002, when we saw this super cycle kind of rotate from what we're in now into a big downward cycle for stocks and a big rally, a major rally for metals. You look at the dollar, and the dollar's had a very sharp drop over the last several months. It's been trading sideways now in a bear flag, a bearish pattern, and it's just starting to break down. Very similar to what we saw in late 2002, right near the end. And that is, if the dollar does break down and follow through, we're seeing the Dixie, the dollar index probably move down to 85 or lower. And we're probably going to see metals go absolutely ballistic. And it could be that. I mean, I think this is going to be one of the big sparks that send metals through the roof. And I think they're trying to save the dollar. They're trying to hold that dollar up because once it starts to collapse from this point, I mean, it's an ugly chart. There isn't going to be an investor who wants to be holding US dollars because they're going to lose a ton of value just in the currency alone. Not to mention the assets. If the assets go down, you're losing, you're getting hit twice as hard. So the dollar's been the favorite currency for the last several years. And everyone's been piling into the dollar. Then they've been buying US stocks. So they're benefiting double on the upside. But when the tables turn, things could get ugly. But the weird thing is, when things get ugly with the stock market, we tend to see the US dollar actually rally. So I don't know how it's going to play out. At this point, it's in a downtrend. It's starting to break down for another leg lower, which means metals and miners are going to have a pop and they're going to have another big leg up. And there's a lot of upside potential. I mean, silver looks like it's going to 32 really quickly and then 39. And that's just based on this most recent chart pattern that's formed since the March lows. I think it's got way more potential than that. But that's where the chart's showing over the next 3 to 4 months is $39 an ounce silver.
Mhm. Very interesting. And now I just wanted to ask you how the fundamentals or just the drivers in the economy factor into your thinking as a technical trader because I know you've been talking about black swans before and gray swans before, and I know you're very concerned back in February about the stock market. So, just like, is the election and this uncertainty, or possibly a Biden administration coming in, is that factoring in one way or another, or you're all just pricing the charts? Is the lockdowns like how does that dynamic with these shifting fundamentals? How does that factor into a technical trader, Chris?
Yeah, I don't trade off them, but they increase the risk for a trade. For example, the week of the election, you saw the stock market. I think the SP 500 rallied like 12%. It rallied up and then would gap higher the next day and rally and then gap higher and rally. And then of course Biden wins and then the vaccine news slides out and the stock market gaps higher like 5% the next day.
Mhm.
And while the trend is kind of moving higher and breaking to an upside there, there's all this added risk because of these news events taking place that it makes it, you have to step back and say, okay, well, the way price moved up is generally in a formation that we're going to see those gains given back. And if something can move up 12% in a 5-day window, the stock market, which is very big move, it can also drop that much or much more in the same period of time. And because those news events created that much volatility, when volatility in it from a technical standpoint reaches a threshold, that's when we step back and we say, hey, we're really just walking through a landmine right now. We're better to step back, let everyone else walk through them. Let's see where the markets pop and drop, shake everybody up, do its damage. And then once things settle out, which we're getting to that point right now, we can step back in with a new position. So while I don't trade off news, if the news is creating extreme volatility that adds risk to any position we take, we step back and we say, okay, we're not trading this news, but we're not trading because of it, because it's added from a technical standpoint, it's now too risky to trade.
Mm-hmm. Very interesting. And Chris, we've talked about a bunch of different markets here. So just what's exciting you the most? Which of these is exciting you the most? The dollar, stocks, the metals, oil? Because I know you kind of like to get your pulse on all of those different markets we had talked about. So what's most on your radar right now as we move into the end of the year here, Chris?
Right. Well, as a precious metal lover, and I've got lots of it stockpiled up, I would love to see the US dollar collapse and see silver and gold go through the roof, along with the miners. Obviously, a lot of us are all invested in those plays for the big picture. And so I think there's a lot of potential there. That to me is the most exciting thing, is seeing silver and the miners. Like, just for example, the SILJ, the Silver Miner Junior ETF, based on the chart pattern it has, it's got about a 63% upside move from where we are right now today. So that's a huge upside move, and that could be in a fairly short period of time. I think eventually we're going to see lots of troubles with people getting physical delivery. I mean, I think, what was the gold delivery for the contracts like last week? It was like 5,200 contracts. I can't remember how many billions it was in gold. I mean, I'd like to see all that actually get delivered. And we're going to see the physical price start to go up. And that's why I like physicals, because eventually, I hate to say it, but the stock market is rigged. It's all paper money. I mean, none of it's real, it's manipulated. And the real asset is to have your physical bullion. So when the brown stuff hits the fan and you say, well, I own these ETFs, or I should be getting these contracts of gold delivered. Well, I mean, it's still paper. People default all the time on delivering goods and services. So you're best to stockpile the physical, because if things get as ugly as they potentially could be, you better have physical stored away outside the banking system. So I'm really excited about precious metals. Not that I want them to go sky high, because it means we're probably going to be in a really rough economy to live. Things won't be that good. But I mean, you've got to hedge it. In case it happens, you better have some that's going to skyrocket in value to counter the lifestyle change, right?
Yes, indeed. And I just add one more thing onto that, because yes, the faster the dollar goes, the less pain it will actually be on people. Because if this dollar collapse doesn't happen, if it's like slow and drawn out, that's going to be a heck of a lot of pain on Main Street. So I see where you're coming from there. So just final question, Chris, just with the technical traders, you don't only cater to traders, because you also have something called, I think, like wealth, like wealth investing or something. So could you just explain, what do subscribers get to the technical traders, Chris?
Sure. Yeah. So we've got four services. So we've got one called the technical investor, and that's one where we follow the stock market and we follow precious metals. And more or less, we've got a model portfolio saying, okay, this is how much percentage you should be in the SPY or the SP 500 or the NASDAQ. And this is how much you should have in gold or silver. And then as the market rotates through these major bull and bear market cycles, we simply rotate from equities to metals, then cash, and then back into equities. And we just ride the bull and bear market. Super easy. It's kind of like the couch potato investing. You don't have to do much of anything. It's, bull markets last, 7 to 10 years. Bear markets last 8 months to 2 years. So you're not looking at a lot of big trades, but we are covering some of the best assets, the best sectors as an investor. If you wanted to get a little more aggressive, you could move into the EV market, electrical vehicle, or you could move into the solar market for a little while. And so we're going to be providing these hot sectors that you could go into. And then we've got the technical trader, which is swing trading, hot sectors, whichever sector or commodities moving, gold, miners, oil, technology, all the different sectors, could be anything, utilities. And then we've got the technical wealth advisor, which we trade as a position trader. So the average trade is about 40 days. And we're either long the stock market or long bonds or in cash. And so we ride the stock market up. When sentiment and our signals change, we move and get long bonds, because they tend to rise while the stock market goes sideways. And then we move back to cash. So pretty straightforward, lazy kind of active trader strategy. And then we've got an options service coming out shortly too. So you can take advantage of the indexes and individual stocks that are having these explosive moves and apply options, which really mind blowing if you understand how to trade options, right options. Yeah.
Definitely. Well, there you have it, folks. That is awesome because that's from the couch potato investor all the way up to someone who wants to be totally active in these markets. Chris Vermeulen, I'd like to thank you for joining us again on Silver Doctors.
Hey, thanks for having me. Always a pleasure.